Hello, and welcome to Trading Without Fear. Good day, everyone. So here are my trades that I took for October 27th, 2022. So this right here is a 3-minute time frame of the queues, and what I was looking at was the queues opened up. Yesterday, they tried to have an attempted breakout over the three-month one-day chart, and it failed a couple of days ago. Yesterday, we came down, had a hammer candle, so I anticipate a little bit more downside. So when I was looking at the queues this morning, at the 3-minute time frame, I didn't get any fills up here. I was looking to get some put contracts right here. Just didn't get a fill. When it came down, I didn't chase it. Didn't want to, get into a, position of where it comes down and all of a sudden reverses. So what I ended up doing was waiting for some sort of a bounce play. So here's the trade that I took, which was some calls. So right around this time frame, let me see. Let me get the right one. Okay, here we go. So this right here is the calls that I was looking at. So I ended up going for 20 contracts at 52 cents. Got stopped out at 51 cents. And what I was looking for was around the 1-minute time frame. This particular trade was this first time it kind of hesitated around here. Kind of on this green candle here, on the 1-minute time frame. It hesitated. I ended up going long. And as it started coming back down here, I ended up taking a trade off on this candle right here. So I entered on this green candle, took the trade off on this candle, which a 1 cent loss is not that big of a deal. When it started coming back down, and this area where these red lines are at is where I put my support and resistance at. So based off of the 15-day, 15-minute time frame, it looked as if, this area right here would kind of be support over and under, support on this day. This this red line was resistance or support on this day, so I thought maybe it could become resistance or support today. So what I ended up doing was switching the time frame from 1-minute candle to a 3-minute candle. For me, the 1-minute candles kind of implement FOMO, where you see those candles going up and down really rapidly. It kind of gives me at least a sensation of I need to do something and pick whatever direction I think the stock is going to go. So I waited a little bit more. When I saw that the stock was, still in a downtrend, I waited for this, red line to see if it was going to hold the support, and it came, it bounced right off that. So I ended up getting long 20 more contracts at 45 cents. And I wasn't sure of, I don't really play, morning panics very often in the queue, so I wasn't sure of how high I could go. Originally, I was looking for, a potential of like a 70% profit. When it started hesitating in this range right here, I ended up taking the trade off. So took 20 contracts off at 60. So that's still right there is not a bad profit. And then throughout the day, I kept trying to, add into, thinking that, okay, well, this came down. There was a trend reversal right here, so I ended up going long on this candle. When it got stopped out, I end up, adding more to position around this area, thinking that it would come back down. This may act as support, and we'll continue on. And when that didn't happen, I cut the contracts, all 40 off at 30 cents. So when it started coming back down, I ended up reversing positions again on a different options chain or options contract, and I'll go over that here shortly. Near the end of the day, I noticed that it wasn't cracking down right here, and it kind of, again, reversed trend. So I ended up going long again, 80 contracts this time at 30 cents. When it started, kind of ramping up, didn't take anything off. When it pulled back under and it started hovering around this red line again, I figured there's just not going to be any volatility, at this point at the end of the day. So I ended up just going, taking 80 contracts off at 31 cents. So 1 cent per contract profit, not a big deal. And then what ended up happening was these right here are some puts. So I did end up getting some puts as it was starting to come down. I believe that's what it was. So let me see. Yeah, so there was this part right here where I thought there was going to be a little bit more downside. So when I exited the my first calls, I thought, okay, well, maybe there's more downside. So I ended to get 20 contracts at 46 cents. It did actually go down a little bit more on this candle, and I ended up just noticing that it was hesitating. It was starting to form a support level. And this support level here was actually holding. So I quickly exited out of the trade, took 20 contracts off at 52 cents. So a nice quick profit there. And then gave it some more time. It started forming these lower highs. It was under VWAP. So I took my first position on these two candles right here, 30 contracts at 24 cents. And then when it tried to retest that VWAP level and failed, it came back down and then retested that level again. I ended up getting short again at 30 contracts at 28 cents. So 4 cents higher than my original purchase. And ended up in the trade work when it started cracking back down and went below the support level. All 40 contracts cut off at 45 cents. And then I had 20 contracts still on because that's 60. So I got 40 contracts off there. There's still 20 contracts. And this right here reached the 30% was, or the 24-cent entry, or the $24 entry. It reached my profit goals of 70%. This 28-cent one, there were still two lots or 20 contracts that just didn't meet that profit goal. So when I noticed that it was starting to not work out, the trend changed. I ended up taking the rest of the position off, 20 contracts at 34 cents. And then this is the area that as the chart started fading down again, and I noticed that the trend reversal didn't hold, I ended up going short again, anticipating maybe a bigger drop. So I ended up getting 40 contracts in at 40 cents, added to position at 40 contracts at 40 cents, and then took them back off for a break even at 40 cents when it kind of came back up and was starting to reverse, which is when I was talking about this trade of where I decided to switch positions and go long. This is another trade that I ended up taking, which was right here. These are some puts. So I did kind of think that at this point, maybe this area was going to act as resistance. Didn't really think that it was going to keep going up. So I ended up getting 20 contracts at 42 cents, got stopped out at 37. And then I ended up getting short here for 20 contracts at 34 cents. And then it was able to scale the trade and got them off at 59 and 59. So that right there worked out pretty good. So overall, today's profits, you can see there is $1,040 plus 100. So it's a $1,540 profit on the day. So from a $1,500 account, I took it up to $10,847.11 over the past couple of weeks. I ended up, resetting this probably about 3 weeks ago now to $1,500. One of the things that I was testing last, one of the videos I was doing before, was to determine whether or not that theta decay had any impact based off a certain time frame. And I don't really think it does. Doing some back testing over the weekend and some paper trading over the weekend, it looks like, because the Qs and a lot of them, there's a lot of volatility in the morning. And then as the day goes on, especially after a certain time frame, usually around 10:30, the volatility kind of slows down, or the volume does. And here's a good example of that. So if I would have stopped trading at that 10:30 mark, or, kind of bought, today's expirations, I didn't trade yesterday, but this right here is a nice example of a fade pattern. And there was a great potential to actually enter into that fade pattern. And from tracking that, there was an opportunity for a 483% profit from buying around here, and then a drop down to here. So there's a good range on that. Basically what it comes down to is from at least the way I view it, is the options are a lagging indicator. So oftentimes if there's some sort of a pattern there or something like that, even if the pattern is still, in play, it's better to actually buy it later and wait for that pattern to form, and sometimes even wait for that pattern to start working before you enter into the trade. So like, you know, during this consolidation time, you can see as the stock is starting to just kind of wiggle around, there's not much options volume. And then when the so when there's a little bit more, let me see, this is the okay, this is the one I want to look for. So when the trade starts to kind of, when the stock starts to, you know, form, there's just a little bit of back and forth price action, and it's just during that consolidation time. It's not until the, you know, the trade starts to work, and that's when the options volume kind of comes in. Same thing with right here. There's just some sideways price action, up and down movement. Once the, you know, underline starts to break down or trade starts to work, that's when the options start to come in. So in a situation like this, today is a little bit more choppy, but if you look back at other stocks in other time frames, for instance, the one for the Qs on October 26th, you'll kind of see a little bit more of what I was talking about there, of where the, and I can't go back on demand on that one because it's too soon. But during this sideways price action, even though the trade is actually working, the options contracts are just kind of going sideways until it starts to break down here. So I think during those later times in the day, the best opportunity is still have that 25% risk, but it's probably better to actually wait for the trade to be closer to working versus trying to get in early, taking a position, let's say here, here, or here. It might be better to actually wait for the trade to break down a little bit further before you enter the position, because there's still opportunities to get into the trade. So that's pretty much it for today. So it's pretty good profit today. Again, $1,540, few trades, but overall, everything's green. So hopefully you guys had a good trading day as well, and we'll catch you next time.